Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up, and this is for Thursday, the 4th of May, 2023. Interesting day. The wolves are out, and they're searching and pushing down on PacWest, Alliance. They're knocking the heck out of some of these stocks. I even saw Comerica today down about 13% at one point as I was looking at it. So whatever it is, there's a group of pros, because in order to be short and drop it down, most people that do that are pros. You have to be able to borrow the stock to go short and make arrangements for it. They're beating up on these. They see something that I'm not quite certain what it is, but they've taken these values down and down hard. Normally you'd say, hey, I want to buy a bank when it's down 30%. Well, you've not only had 30%, that's one-day drops. What are you doing? They're down 80%, 90% overall. I mean, and that's what's going on. We keep hearing Alliance come out today say, no, we are not for sale. We're not doing strategic options. Okay, your stock's getting killed. You're down 38% today. And of course, PacWest is looking for strategic options. When you say strategic options, it means somebody buy me. Please take me out of my misery. That's typically what it means, and it doesn't appear to anybody stepping to the table. So the question is, do they get into a situation where now the run on their deposits begin? People just push a button, move it to money market funds, take their money away. Then they got to cash in. As you know, we've gone through this with First Republic and the others. If securities that they don't want to cash in, it suddenly changes their book value. It changes everything, and you're into trouble. The market's smelling something is going on. FDIC news. It appears that the FDIC is going after the big boys to make up the $13 billion shortfall from First Republic. That seems to be how it's going to work out. The smaller banks look to be okay. Even some of the larger banks, I didn't say the big boys, the larger banks with $50 billion in assets may not have to pay more, but they're going to go after the big boys because the big boys, who got the deposits, who's earning the money? I think that's the logic. And they're going to announce something right away, so don't expect that to take too long. We had Apple earnings today, and Apple was a beat of the analysts, but not a good set of numbers. I mean, I realize you're going to tell me, Ira, oh, blah, blah, blah. You're up 1.5%, 2% in the aftermarket. Terrific. It's not a beat. It's a beat of low bar set by the analysts. And the good news is, for Qualcomm especially, the iPhone 14 is selling, and that keeps the business going. But if you took a look at MacBooks and other things, it was not impressive at all. So yes, better. Yes, in this terrible times, nice. But I don't think you're driving the stock up dramatically from here just yet. When we take a look, you have a pattern of a higher high and a lower low. So the market yesterday's outside day down had the follow through today. Where'd the market go to? What's the neutral point on a chart? I try to teach this to you over and over for watching here. And by the way, I hope you do like these videos. And if you like, you can join me in the morning subscriber videos by clicking that blue button on the YouTube as you watch it, and you'll be able to just join with us. And I think that's pretty cool. But you tell me, as you pull back, where's the market keep finding support? The line in the sand. The demarcation point. What do I mean by that? When the market's under it, I flip and I get bearish bias. When the market gets back over it, I flip and I have bullish bias. So I'm a switch hitter. Market goes back and forth here, playing its games, all right. And where did you get up to? Bollinger Band tops. What are the odds of staying over that black line? 5% of the time. So when the market gets up there, the pros like to say, you know, the spot where I want to lighten up my position, I want to get out of my position, I'm going to do something. A pro doesn't just sit there, let it hit it, and do nothing. That's my opinion. Doesn't mean that I'm right for everybody, but it's my opinion. Momentum turned down. So I have a market that got up, not today, but yesterday, gets up here, gets to the Bollinger Bands again, overbought, And today to say that the market fell back to the neutral spot, am I surprised? Not at all. Is there a trend to trade here? None. Why? A trend, an uptrend, has higher highs, higher lows. You don't have that. You have a higher high and a lower low. In a market that's in an uptrend, you don't want to buy an overbought market. Well, this market, in theory now, isn't overbought. Why? As long as both numbers, or either of the numbers, the right grammar, isn't over 70, it's not overbought. But you are but you are, one more chart, I wanted to bring this in. Now, here we go. Hit the wrong. There it is. I knew I'd catch. Hold on. There it is. That's what I want. You are at the point to do nothing. My brain's wrong. I already had that up there. Schwab. Well, if you're watching all these other banks get hit, Schwab is a big bank at the end of the day. I know it probably better than most because I owned a stock firm. I know where you make money in stock firms. I owned a discount firm, by the way. And when you look at it, now with no commission, they're making money on your money. It's one of the big areas. And if they did as so many other banks did, and they took money in and they bought longer term to lock in 3%, 4% yields, which looked good at that point, and now yields are higher and people are asking for their money and moving them to, when I say higher, you can go to a money market fund and often get a 5% or higher yield. So they'll say, hey, Charles, hit the button, send me my money, I'm going to put it into a money market fund. Well, it starts weighing on their other part. They have repeatedly come out, properly so. They have the money to withstand it. They know the game. They know what's going on. But the market is just pushing on them, saying, you've got problems. These are approaching new lows for the move. So this is a stock that just recently, February and March, was an $80 stock. And tonight you're sitting at $47.37. That's a lot of pain. By the way, Apple doing another $900 billion stock buyback. Did you hear what I said? I was surprised. Who has that kind of money to throw around and keep buying their own stock back? Unbelievable. UGA, look what happened. Here is a market that if we step, and that's what I want to do. I want to walk you through this. This is the life of a market. So you have a market that breaks down, goes to the Bollinger Band, and challenges the 100 and the 200-day average. That should be the support zone. If it gives way, what happens is what was support often becomes resistance on a retest. Now, I wouldn't call this resistance. You're still basically challenging it. Got it? But if it starts failing again, now that becomes the resistance area. And what's happening is you're starting to get in this market the 18-day average, and this was on May 3rd, so this was a day ago, going to start arcing down towards these numbers. It'll arc down even more tomorrow when the market reopens. You've got some big resistance in that area. So the play was early, no question. If you were buying in April and May for the summer driving season, you got hurt. There was a play to be had. I had you participating in this in my subscriber videos, and we gave some money back. No question about that, all right? We caught part of it and then gave some back. But once you got through this, right there, that was the end of the game. Once you lost the embedded reading, it was the end of the game. The game will come back. The driving season, according to Moore Research Center, basis what futures markets have done over a 15-year period, typically begins May 8th. And I'm talking how the futures markets react. This is based on futures, folks. So I start watching it to see what's going on. I love a good old-fashioned washout. I want to see the embedded reading. Why? When you lose that, it means that you're going to go back and challenge these averages. Until it's lost, the sales on a hard rally are going to happen by the pros until it's lost. They'll keep pressing it until it doesn't make sense to press it or until the market reverses. Tesla, just plain going sideways in an oversold condition. It's sort of marking time, but there is a bearish event happening. Notice how the 18-day average is just over the 100 in green. it's about to get a bearish crossover. And when that happens, you normally go down and often challenge the most recent low of the market. Does it have to work all the time? Of course not. Does it work often? I think so. I hate the fact that we're oversold with it, but oversold can also become embedded and create even more of a break in these markets. In XLF, here is a market that I'm still pissed that the market snuck out that high. I thought the market was a reasonable sale here, not going to take that out. And today would have been profits. Instead, loss. Not a big one, but a loss happens. In fact, it happens a lot. But if you can control them and you let the profits go, fine. I'm jumping for joy today. I am a happy camper. I had told traders, hey, I'm pretty bearish right through here, and I'm looking for the Bollinger Band. Yada. So you lose some, you win some. It's how it goes. But that was a short covering area. I don't see anything to do in stocks. I see lower lows, higher highs. We had tested the 100-day average in the Bollinger Band, went back to the line in the sand, that neutral area, the 18-day average, and here's a retest of the market. I don't know what to do with that. In the home builders, okay, you lost the embedded reading. I know what to do with it. What do you do when you lose an embedded reading? Should I walk you through this? This is a market with both the red and the blue over the 80 level. If you close under 79 like you did today, unless you get it right back tomorrow, the odds are before you get up over that high, you're going to hit wherever the 18-day average comes in. Track it. See if we're right or wrong. XLE, the energy sector. Would I ever tell a client to be short under a Bollinger Band or long over a band? Slap me once, slap me twice. No, not going to happen. All right, this is sucker money. That doesn't mean that you're a buyer. Sucker in that you're going to move to the right-hand side of the Bollinger Band. If you want to be short, there's a better way to do it. People will say, oh, I'm buying it because it's going to get over. That's the kiss of death. I've been around that. That's like saying up here, I'm going to go short, it's going to back off. It's what's called the gorilla glue trade. Once it latches on, you don't know where it's going to let go. I've tried that. I ran studies galore. I threw that idea away. Doesn't make sense. There's better studies out there than that. In GLD, too overbought, up to the upper Bollinger Band. This is where everybody's getting excited. I'd be very careful. Would I tell any client to buy over a Bollinger Band? Not going to happen. SLV. Went down, challenged the lower band to the upper band, you're overbought. Metals are looking at this banking, what's going on. It's looking around it and saying, hey, here's another two banks that could be going down. And people are rushing in, buying bonds, notes, the yen, and dumping the stock market. I mean, that's the fear. You have a fear thing going on right now. In copper, let me get to this. Here's another retest of an important area, the 100-day average in green. The trend is down. Will it bust through that and go to the Bollinger Band? Even if it does, you're oversold already. TLT, you've got lower highs, lower lows. And with the close today, believe it or not, it threw out the very first. You don't want to be long anymore. Maybe short with stops over yesterday's high is how I think some of the pros are going to look at that market. In UUP, why would you go into the jobs report? You know, there's a time when you take your hands and you go, I'm not going to do anything. I'm going to be good. I'm going to wait for the report to come out and see the reaction. That's exactly what you do on those. And if you're doing that in the dollar, you're doing that in the FXE. One's a mirror of the other. They're just a flipped image. That's typically what goes on. I don't know why my quotes aren't coming in today, but they're not. I want to talk to you. Have you ever seen this page of mine? This is the free offer page that we offer, and it's got everything you can imagine. All you do is when you get on our website under free offers, you give a click. And each one that you click, you can choose as many as you want. It creates for us an email, sends it as soon as you hit submit. It's all done. And we get the stuff right out to you. And there's a slew of information here, a real lot. So how do you get this? Well, you can go to our website at iraepstein.com under free offers. You can move your cursor up here. There'll be an icon. Give it a click. Take your choice and enjoy your weekend. It's a lot to look at, but it's a lot of fun. I helped put most of this together. I'm pretty proud of it. I'm Ira Epstein. You have yourself a great weekend. Go in, take care of everything there, and I will talk to you all come tomorrow morning. Take care.